Morning, guys. You can see time is around 9:24. Let's look into yesterday's 11th of April, Nifty 50 as well as Bank Nifty trade analysis. And if you look into a daily time frame analyze, guys, in Nifty 50 as well as in Bank Nifty as well, you can see in Nifty 50 the market actually gapped down. It was a very huge gap down, guys. It was around 2,160 points in gap down. But what happened is that the market showed some kind of bullish sentiment. But here the market rejected price from 20 moving average as well as the 100 moving average here. This is the 200 moving average, guys, the blue color line, and closed below this low, clearly signifying some sort of bearishness. But what happened the next day is that the market gapped up above the 21 moving average, came and rejected price from the 200 moving average, means it took support from this 200 moving average and tried to close the above the 21 moving average, clearly signifying bullishness, guys. This candle, which actually signified some sort of bullishness that there are buyers entering the market and prices trying to hold above the first candles. If you consider the low to high of this candle, you can see the market rejecting price on the next day from the 0.38 level, or if you consider this swing momentum, guys, you consider this swing momentum because the market gapped down and it showed some kind of momentum and it went all the way to this level. So you can see the market here is a 50 level over here, where price is trying to hold support and there are clear buyers entering the market. And you can see on this day, guys, on 9th of April, you can see the market clearly gapped down here and it came all the way to this level, the 200 moving average, but it rejected price from these levels and closed above the 200 moving average, clearly signifying some sort of bullishness, guys. And since Wednesday was expiry day, also you can expect some kind of manipulation and you can see this kind of pullback. So what you could have done is to keep your stop loss just below this 200 moving average and expected the market to go further towards the upside, or you could have expected some sort of bullishness. This is the daily time frame analysis, how I'm explaining to you guys. You can see the market from low of this candle to high of this candle. The price is taking support from 50 levels and the market is trying to move higher. So what you can expect is, if you try to plot the Fib extinction levels, this the high of the low of this candle to the high of this candle to the low of this candle, you can expect the market to come all the way to this level as well, guys. You can expect some kind of targets here and the 100% target level also here. See the 51,500 and 52,500 levels is what I'm expecting. You can expect some kind of rejection here at 51,500, or in case if the market clearly breaks, it may move all the way to 52,500 as well. So let's not look into that deeper, and let's look into a smaller time frame analysis and see how the market behaved on 11th of April. And you can see clearly here that the market gapped up, guys, clearly showing some kind of bullish sentiment, and market sentiment is actually very bullish. And you can see this kind of pullback clearly initiating sellers to enter the market. But definitely, as the market sentiment is very bullish, guys, the market failed to close above the mid of the first candle or else the 5 minute zone, which we have marked earlier. And you can see this kind of momentum towards the upside, where the market clearly broke the structure high, clear break of structure, guys. And you can mark actually the demand zone over here. But what you can see is that the market clearly broke this demand zone over here, since there is no clear order block formation. But what you need to look into higher time frame analysis and see, guys. If you look into higher time frame and see the market consolidating above the 9 as well as the 21 moving average, clearly signifying some sort of bullishness. But you can see the market retraced here, showing a huge bearish momentum, but failed to close below the 21 moving average, clearly signifying some sort of support. Whenever you find such kind of huge gap up, guys, and not and on a non-expiry days, it's always trend. So follow the trend itself, guys. Only on expiry days you can expect some kind of manipulation and rejection of price from these levels, and it might continue further selling towards the downside. You can expect some kind of manipulation, but you can see here the market is trading above the 9 as well as a 21 moving average here. And how could have you taken long position here is that in case if you try to mark this structure, guys, where the market actually broke this structure low, clearly signifying some sort of bearish. You can see clear breakout structure with fair value gap or impulse. You can impulse imbalance candle, and if you mark the high to low of this candle, and you can see price rejecting from 0.38 level over here, clearly signifying some sort of bearishness. This is the 0.38 level, or you can mark the 50 level also. This is the 50 level. And what you could have done is that in case if the market would have been bearish, no guys, the market would have rejected price from day VWAP level and continue further selling towards the downside. And the market wouldn't have been broken towards the upside. This kind of momentum where the market broke the day VWAP level, clearly signifying bullishness, guys. And what you could have expected is that the market, after clearly breaking the structure low, might have retraced to the 0.38 level and continue further selling towards the downside. This is how usually the market behaves in case if the market sentiment would have been bearish. And you can see there is this breaker block level as well, where actually market broke this structure but failed to close above this high and rejected price from these levels. So you could expect some kind of rejection from these levels. But you can see this candle, which actually broke towards the upside, taking support from 9 moving average, clearly signifying some sort of bullishness, guys. Or in case if you try to plot the anchor VWAP level here, you can see even the anchor VWAP level as well as the day VWAP level showing some sort of support over here. And let's take this 550 level out. With this candle, guys, you can see clearly price taking support from the 5 minute zone, the mid of the first candle, and even the anchor VWAP level showing some sort of support here, and the day VWAP level also is showing some sort of support. After this kind of candle, you could have easily entered long position and keeping your stop loss just below that candle itself and targeting all the way towards the upside. So for target levels, you could have easily plotted the swing over here, the low to the high to low of this candle. You could have easily targeted the 1.68 level over here. You can see this is the 1.68 level where you could have expected price to reject and continue further selling towards the downside. But what happened here is that the market faced rejection from the 100% to the 1.68 level. You can see this kind of the 0.5 level, guys. This is the 0.5 level or the mid of the 1.68 level or the 100% move is where the market faced rejection. And what you could have done is you can see this kind of consolidation, guys. The market, after this kind of impulsive momentum, which actually broke structure, and the market showed some kind of retracement, trading in the upper zone of this impulsive momentum and continued further bullish momentum. And you could have find the last support zone as this candle over here. You could have tried your stop loss till this level, or after this kind of clear breakout structure, you could have kept your stop loss after this kind of impulsive momentum to below this level, and you could have expected the market to continue further bullish momentum. So you can see this kind of very good impulsive momentum. You could have expected another impulsive candles or further continuation of price towards the upside. But what happened here is that clearly the market rejected price from these levels and continued further selling, clearly even breaking this support zone over here and even this support zone over here, guys. You can see even the last support over here, also the market broke, clearly signifying the market sentiment from being bullish to bearish. And clearly the market formed a chalk over here. And after this chalk formation, you can see the market retraced, and you can consider this impulsive momentum towards the upside and downside. The common point between this to the common point between this, you can see the market faced rejection from 550 levels over here. This is the 550 levels where the market rejected price from these levels. And you could have expected the market to break this low, but clearly the market here was not able to break this low. And since there was some fair value gap here, the market came and mitigated this fair value gap here. You can see this fair value gap is after this kind of impulsive momentum where the market came and mitigated. And you can see after this kind of mitigation, you could have easily kept your stop loss above this candle. And after this kind of huge bearish candle, after this kind of impulsive momentum towards the upside, you could have easily entered short position here, keeping your stop loss just above that candle itself and targeting all the way towards the downside. So for target levels, in case if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you could have targeted the 100% move over here. You can see, or the 5 minute zone or the mid of the first candle is where you could have easily targeted. Or in case if you consider this swing momentum instead of this retracement now, guys. So the common point between this to the common point between this to the common point between this, you can see you could have easily targeted the 1.68 level here. You can see how the market came all the way to this 1.68 level. This is the target levels, guys, where you could have expected the market to behave, react, and you could have targeted it all the way towards the downside. And you see this kind of impulsive candle towards the downside made an order block level. This is a clear 1 minute order block where the market broke structure towards the downside. And again, you can see this kind of channel pattern formation clearly signifying some sort of bullishness after this price rejection. When you feel some kind of channel pattern towards the downside, it's a bullish, guys. Whenever you find channel pattern towards the upside, it's a bearish momentum. And you can see after this kind of momentum, the market went all the way to this 1 minute order block and again rejected price from these levels. The 1 minute order block after this kind of huge bearish candle, you could have easily entered short position, or after this kind of dodgy candle also, you could have entered, keeping your stop loss just above this candle itself or the order block level, and you could have targeted towards the downside. So in case if you consider this swing momentum and try to plot the Fib extinction levels, the common point between this to the common point between this to the common point between this, you could have targeted the 100% move here. You can see the market came all the way to this 100%. This is where you could have targeted, guys, this momentum, and you could have expected the market to continue further bearish momentum. And you see this kind of impulsive candle, which actually even broke the structure low, but failed to make a lower low here. You can see even this low, after this, guys, the market showed some kind of retracement and even failed to make a lower low here itself. And again, the market broke structure towards the upside and even closed above this low. You can see this kind of chalk formation over here, where the market failing to close below this low. This is a clear chalk formation where the market failed to make a lower low here, failed to make a lower low here. In spite, the market showed some kind of huge bullish engulfing patterns over here. There are two candles over here showing a very good engulfing candles, and market actually broke structure towards the upside. And in case if you try to plot the anchor way up levels of this swing high momentum, you can see price taking support from these levels. And if you try to place the anchor way up levels here, you can see the market is trading above these swing momentums. If you consider this swing momentum here, the market is trading above this level, and even market is trading above this swing momentum also, and the market clearly found a chalk over here. So if you consider this momentum, guys, and the low, the common point within this to the common point within this, you could expected price taking support from the 0.38 level, but definitely the market here after this chalk formation, the market again took support from 9 as well as 21 moving average and continued further selling, further buying pressure. So the first entry was at here, guys, taking long position here, keeping your stop loss just below this candle over here and targeting all the way towards the upside. So what you could have considered is to trade above as long as the market is trading above the 9 as well as the 21 moving average. And the second entry is that you could have expected the price, guys, after this kind of impulsive momentum, the high to low of this candle, you could have expected price rejecting from 50 levels over here. You can see this is the 50 level where price might have faced some sort of rejection, and you could have after this kind of impulsive momentum, the market might continue further selling towards the downside. This is how you could have expected. But what you need to see here, in case if the market rejected price from these levels or might continue further selling towards the downside, is the price action here, guys. You can see this kind of huge bullish engulfing patterns clearly showing some sort of demand. And if you look into higher time frames here and see how the market behaved in a 5 minute time frame, you can see after this kind of huge bearish candle, the market after that showing some kind of bullish support where the market is taking support from 21 moving average, clearly signifying some sort of bullishness. So in a 5 minute time frames, the consolidation of here is at the 5 minute at the 21 moving average, clearly showing some sort of demand. That is one point where you can consider it to be a demand zone. And the market failing this for 50 levels, you can consider another point to be a demand zone. And the third point here is the anchor way up level. In case if the market sentiment would have been bearish, the market would reject price from these levels and continue further selling towards the downside. But here, the market broke this anchor way up levels towards the upside and taking support from the anchor way up levels as well. You can see price taking support over here. And here you can see after this, the market clearly came all the way to this fair value gaps over here. And market is consolidating in a sideways. And again, the market took rejected price from day VWAP level. You can see this is the day VWAP level, guys. If you consider this momentum over here, you can see the market is trading above the day VWAP level, clearly showing some sort of demand over here. And you can see after this, the market showed another huge bullish candle. You could have added on to your position here itself, keeping your stop loss just below that candle, and you could have easily targeted towards the upside. So if you consider this swing momentum now, guys, where the market manipulated both buyers and sellers, you could consider the swing low to swing high, and you could have targeted all the way to 2.61 level, or the 1.68 level is where you could have targeted, or the swing high, or as long as the market is trading above the 9 as well as the 21 moving average. You can see here is where actually the market broke structure here. So you could have targeted it all the way to this levels over here, guys. So I hope you're understanding what I'm saying. Or in a 5 minute time frame, if you see, this is where the market actually broke. So you can consider the last support zone here. So this is the last support zone over here where actually market broke, again retraced back and continued further bullish momentum, but market failed to make a higher high. Here, the market actually broke the high but rejected price and closed below these levels. So if you look into a smaller time frame, guys, you can see the market clearly broke this structure high here. And again, the market retraced and rejected price from this fair value gaps over here. You can see this fair value gaps. Again, the market broke this high, but rejected price from these levels and continued further selling towards the downside, where the market broke this structure low. You can see the market clearly formed a chalk over here, rejected price from these levels and continued further to selling towards the downside and they clear the last support zone over here, where the market formed a chalk over here. You could have exited your position, but what I'm teaching you is to enter positions, guys, with a very small or a one candle stop loss is what I'm teaching you. So why you have to enter here is that I have told you if you try to place anchor way up levels, the market here is showing some sort of support over here. And again, if you try to play the swing low, you can see the market here after this kind of bullish candle, the market is consolidating. And if you consider this anchor way up level also, the market is trading above this level. You can see the market is trading above that zone, clearly signifying some sort of bullishness. And the market is trading above the 9 as well as the 21 moving average and consolidating in a sideways. And this was the final support where the market took. Again, the market failed to make rejected price from higher levels and clearly formed a chalk formation. You can see this kind of rejection of price once the market broke the structure high and closing below this zone, you could have easily entered your short position here also, guys. In case if you might have been very well experienced or after this kind of huge bearish candle, you could have kept your stop loss just above that candle itself and targeted all the way to this swing low. You could have targeted all the way to this swing low, guys. You can see this is one trade setup where you could have taken in case if you might have been very well versed in how the market behaves. And if you look into a 5 minute time frame, and if you consider this swing momentum, which actually changed the market sentiment from being bullish to bearish, and you can sweep of this liquidity above this zone, clearly signifying some sort of supply over here, where the market broke the structure. Again, the market came all the way, retraced to 0.38 level over here, where the market failed to where the market rejected price from the 9 moving average as well as the 21 moving average and closed below this level. So you could have easily entered short position here after this rejection of price, keeping your stop loss just above that candle itself. And you could have targeted all the way towards the downside. So if in case if you try to plot the Fib extinction levels, the high of this candle to the low of this candle to the high of this candle, you could have targeted all the way to 1.68 level over here. You can see, guys, this is the 1.68 level. I'm I'm plotting this in a 5 minute time frame, but definitely you could have easily used in a 1 minute time frame also. You can see this kind of swing momentum where the market retraced. So you could consider after this kind of huge bearish momentum, you can see this kind of channel pattern formation. Once if this channel pattern formation is being broken, you could have easily entered short position also, and you could have targeted it all the way to 1.68 level. So I hope you're understanding, guys, what I'm saying. Again, the market came all the way, took support from the day VWAP level, and again rejected price from 200 moving average. Again, the market came and rejected price from 21 moving average and continued all the way to 1.68 level, guys. So this is my trade analysis in Bank Nifty. You can see 1, 2, 3, 4, 5, 6, 7. 7 beautiful trade setups with very small risk to reward ratio is where you could have taken your trades, and there is a pure price action being followed here as the market sweeping these highs. You can see there was a high over here, multiple highs over here, guys, where the market came all the way, rejected price from these levels. But here it showed a clear demand where the market clearly showed sentiment that these highs would be broken, but the market broke this level but rejected price and closed below this. So you could have easily entered, keeping your stop loss just above that candle itself, and you could have targeted towards the downside. Um, that is a liquidity grab, guys. So this is about Nifty 50, Bank Nifty. So let's look into Nifty 50 trade analysis and see how the market behaved in Nifty 50. So here also the market actually gapped up, and you can see the market here after this kind of huge bearish sentiment, the market taking support from mid of the first candle or the 5 minute zone as well as the 21 moving average. You can see this kind of demand zone over here, clearly showing a lot of confluence here. I hope you're understanding, guys. Both in Nifty 50 as well as in Bank Nifty, this kind of demand zone might appear. So in case if you might have traded in comparison with Nifty 50 or Bank Nifty, you could have easily expected the market to continue further bullish. You can see here the market actually showed a clear price action here. The market clearly broke this structure high over here, clearly indicating some sort of demand over here. So the last down candle is this bearish candle, which actually broke the structure high. And even the market broke the first candle's high also. And the market showed some kind of aggressive selling towards the downside, but market failed to close below the 9 as well as the day VWAP level. You can see the market taking support from these levels. And you could consider this demand zone over here, where the market actually might come and take support from this demand zone. So, but this momentum is very unexpected. As you can see, this market trying to break both the daily wrap level, the 9 moving average, as well as the 21 moving average, and expecting the market to come towards the downside. This kind of momentum uh, is not what we have expected, and it's in case if the market sentiment would have been clearly bearish, only then you could have expected some kind of momentum and to trap all those buyers who might have entered here. But since it is not an expiry day, and you can see this kind of consolidation where it happened on expiry day, so what you could have expected is to be the market to go bullish itself. And you can see here the market actually took support from these levels and continued further towards the upside. And in case if you try to plot the Fib extinction levels, the common point between this to the common point between this to the common point between this, you can see the market came all the way to 1.68 level. This is the first target where you could have easily targeted as the 1.68 level. So looking at this support from daily wrap level, you could have easily entered long position somewhere here, keeping your stop loss just below these levels and targeting all the way to 1.68 level. This is the first target, guys. I hope you're understanding what I'm saying. And after this kind of huge bullish momentum, you can see the last support over here where the market didn't even retrace to 50 levels or the 0.38 level. Or if you consider this swing momentum, the high to low of this candle, you could have expected the price rejecting from 0.38 level. But what happened is that the market trading in the upper zone of that momentum and clearly broke the structure high. You can see this break of structure over here. This is a clear break of structure where the market took support from these levels. And you can see the market after breaking this structure high, guys, and the market is showing some kind of imbalance. And if you consider the common point between this to the common point between this, you can see the market trading above these levels, but failed to make an higher high here, guys. You can see the market actually failed to make an higher high. Instead, the market broke this low, the last support over here, clearly showing a chalk formation over here. And if we consider this impulsive momentum, which changed the market sentiment here from being bullish to bearish, you could mark the up candle, which actually broke the structure. This is a clear 1 minute order block where the market came all the way here. And you can see after this, the market mitigated this order block. Once if this is order block is mitigated, it doesn't hold any value. After mitigating this order block, again, the market broke structure towards the downside. Now clearly changing the market sentiment from being bullish to bearish. Or if you consider this swing momentum, you could have expected the price to come and take support from 550 level. So if you consider this whole swing as one momentum, guys, so if you consider this high to low, you could have expected the price to come and take support from this 350 levels and continue further bullish momentum. But here you can see again the market retraced here, and you can see, and if you consider this main momentum where the market actually broke the structure, and if you mark the high to low of this candle, you can see the market rejecting price from 550 levels, and again the market actually broke structure towards the downside. You can see another break of structure here. You can see the 550 level support again was been broken here, and you can see another break of structure. You could have easily entered short position here itself after the initial shock formation and rejection of price from this order block levels and keeping your stop loss just above this candle. This was the initial entry where you could have easily taken guys the short position, keeping your stop loss and targeting towards the downside. Or you could have easily entered after this kind of bearish candle, but what you can see is the last up candle, which actually again broke structure low towards this low is this order block level. You can see again the market came mitigated this order block and could have expected the market to go further selling towards the downside. So if you try to plot the Fib extension levels of these levels, the common point between this to the common point between this to the common point between this, you could have targeted the 1.68 level here. You can see the 1.68 level is where you could have targeted. So short position here, keeping your stop loss just above that candle itself, and you could have targeted all the way to 1.68 level, guys. So this is one target level where you could have entered. Or you can see this order block level. So let's try to plot the Fib extinction levels of this order block level. The common point between this to the common point between this to the common point between this. So you could have targeted the 100% move here or the 1.68 level. You can see this is the 100% move where the market actually broke this, and or else you could have targeted the 1.68 level over here where the market rejecting price from 1.68 level. So you could have expected the market to come all the way to this zone, guys. So this was one short entry where you could have easily taken. This was another short entry where you could have taken. Now, definitely the market here showed some kind of huge bearish momentum, guys, and this order block has been mitigated, so it doesn't hold any value here as well. Once if the order block has been mitigated, but here it found another order block, but here the price action has been complete, guys. So what you need to see is to plot the anchor gap level just above that candle and see in case if the market showing some sort of rejection from this price. So after this kind of huge bearish momentum, you could have expected the price to reject from 550 levels or 0.38 levels. So if you consider the high of this candle to the low of this candle, you could have expected the market to reject price from these levels. You can see you could have expected this rejection of price from 0.38 level, or you could have expected rejection of price from 550 levels over here. But what happened here, this is the 550 levels where you could have expected the market to reject price. But what happened here is that if you try to plot the anchor way up level below this swing low over here, you can see the market showing some kind of bullish sentiment. Again, the market retraced, took support from the anchor way up level over here. And after this, the market clearly showed a huge demand over here, or the clear sentiment, and even broke this high as well. You can see the clear break of structure over here. You can see this is a clear break of structure where the market actually broke this structure high. And even the 550 levels also, the market broke towards the upside. And if you consider the low of this candle to the high of this candle, you can see price rejecting from 0.38 level over here. This is a 0.38 level where price is rejecting, or you can see the day VWAP level, anchor VWAP level here. And if you plot the another anchor VWAP level over here, you can see the market is trading above this and showing a clear price action also. In case if the market sentiment would have been bearish, the market again would have rejected from these levels and continue further selling and even broke this low. But you can see this kind of huge demand. Again, the market actually broke this low also, taking support from 0.38 level. And you see after this kind of break of this level, you could have easily entered long position, or you can see the market breaking the day VWAP level and closing above the day VWAP level. And you can see multiple supports over here, the 0.38 level support here, and even breaking the 550 levels of this swing momentum, and the anchor VWAP level showing support over here. All this shows some kind of confluence that you could have easily taken long position. So you could have somewhere enter long position, keeping your stop losses above this, below this candle. And in case if you try to plot the fib extinction levels of this swing momentum, the common point between this, uh, the the swing low here to the swing low, swing high above, and the swing common point. Let's take the common points, guys. The common point between this to the common point between this. So you could have targeted all the way to the 4.26 level over here. You can see. Let me try to plot the fib extinction levels properly, guys. So the common point between this to the common point between this to the common point between this. I hope you're understanding. So you could have targeted all the way to the 4.26 level. This is where you could have targeted. As you can see, the market coming all the way to this 4.26 level, or as long as the market is trading above the 9 as well as the 21 moving average. You can see the market trading above the 21 moving average, again taking support from 21 moving average, and the market continued further bullish momentum. And you can see this swing, this impulsive momentum, which actually even broke this structure high. You can see this where the market actually broke this high, guys. And the last down candle, which actually broke towards the upside, you can consider this momentum, and you can consider the price taking support over here. This is the 550 level where price taking support over here. So, and after this kind of bullish candle where price taking support from these levels, you could have entered on the long position, keeping your stop loss just below that candle itself, and expected the market to continue further bullish momentum. And if you try to plot the fib extension levels, the common point in this to the common point in this to the common point in this, you could have targeted all the way to the 100% move here. You can see you could have targeted it all the way to the 100% move, keeping your stop loss just below this candle, and this is where you could have targeted, guys. So I hope you're understanding what I'm saying. And you can see the market is trading above these zones only. Again, the market took support from this demand zone. Again, continued further bullish momentum. So this is the last support over here. And here the market clearly broke structure towards the downside here, where the market actually formed, where the market failed to make a higher high instead. So if you look into this demand zone over here now, guys, let me try to decode and see how the market here took support here. You can see there is a fair value gap over here where the market came and mitigated this fair value gap, or a proper demand zone over here. Or you can consider this to be a 1 minute order block also, because the market took support here, but here it actually broke structure high. But again, the market consolidated, and this last down candle, which actually broke this high also, you can consider this demand over here. So you could have expected the market to come all the way to this zone and further show some kind of bullish momentum. But market failed to make an clear with market failed to make a higher high here, guys. This is kind of demand where the market failed to make a higher high, or even this break this high also. Instead, the market even broke this low, They've largely support over here towards the downside with a very aggressive momentum and market sentiment changing from being bullish to bearish. So if you consider the common point between this to the if you consider this swing structure in a 5 minute time frame and see in case how the market behave, you can see clearly it's signifying bearishness, guys. The market sentiment clearly being bearish. And what you can see is to mark the high to the low of this candle. And you can see this kind of impulsive momentum towards the downside, where the market again rejecting price from 0.38 level over here. This is the 0.38 level where the market retraced all the way to the 0.38 level. Or if you consider this swing momentum, guys, and if you mark the common point within this to the common point within this, you can see this is the FA50 levels also, both the 0.38 level as well as the FA50 levels. Since this impulsive momentum which actually broke this low, but here also you can expect the market actually found a chalk over here. You can see there was another chalk formation over here. So what you can see is to mark the common point within this to the common point within this, you can see the market came all the way to 50 levels over here, rejected price from these levels and continued further selling towards the downside. So what you could have done is after this kind of rejection, you could have easily plotted the fib extinction levels, the common point within this to the common point within this to the common point within this. You could have targeted the 100% move, or you could have expected the market to come all the way to this 1.68 level, but definitely you can see again the market showed some kind of retracement. But here the market faced rejection here, guys, again, and showed a huge bearish candle over here. This is where you could have easily taken short position, keeping your stop loss just above that bearish candle itself, and you could have targeted all the way towards the downside. Or as long as the market is trading below the 9 as well as the 21 moving average. Here you can see the market trading all the way below the 9 as well as the 21 moving average. Here is where it actually broke and closed above this 21 moving average. So in case if you try to plot the fib extinction levels, guys, the common point within this to the common point within this to the common point within this, you could have targeted it all the way to 1.68 level. Both Nifty and Bank Nifty, guys, you can see clearly you could have easily targeted the 1.68 level over here. This is the 1.68 level, and you could have easily traded it all the way to this zone over here. And you can see whenever you see this price action being formed, guys, you could have expected the market to take support from this 200 moving average like this, and you could have expected the market to continue further bullish momentum. But what we need to see is to look into a price action point of view and trade, guys. Whenever you see, it's always not 200 moving average support levels. It's always the price action point of view. You can see here the market actually breaking structures with fair value gaps or impulsive candles. And here the market rejecting price from both 9 as well as the 21 moving average and closing below these levels and rejecting price from 50 levels, or if you consider this impulsive swing momentum from 0.38 levels. This is how you can trade, guys. You can say after this kind of support, you could have expected some bullish momentum. Also, after this kind of consolidation, you could have even traded towards the long side. But it's fine, guys, if you have captured one momentum, any one single momentum of any of this sort. So here it was clearly bearish. You can see the 1 minute order block. This you could have easily captured. This momentum could have been easily captured. And this momentum also could have easily captured. Let's not take this trade or this trade. You can see you could have targeted all the way to. This momentum was very good setup, guys, where you could have easily target. Let's not consider this trade, guys. But this is with very small risk to reward ratio. But if you consider this momentum, this momentum, this momentum, and this momentum, I think 4 trade setups was very perfect for anyone, guys. I think if you capture any one of these trades, also you could have made a very decent profit. But I have mentioned to you 4 trades, guys, where you could have easily taken and made a very decent profit with a very risk to reward ratio. So I hope you're understanding what I'm saying, guys. This is a 5 minute time frame where price took support. So it's better always to look into a high time frames and see. So in case if you find my videos helpful now, please like, share, and comment. Share with your friends and family as well. And please leave a comment below, guys, if you find my trades very helpful. And keep supporting, guys. And please leave a comment below as well. Thank you, guys.